to capture the type of move we had from 1960 to 1980, it would equate to an $800 silver price. The RBI, the Reserve Bank of India, announced that they're potentially looking at bringing silver into their monetary system by allowing investors to use silver as collateral at a 10-to-1 silver to gold ratio. If they're right about silver, that implies a $400 silver price based on a 10-to-1 silver to gold ratio.
There's a big uptick in the precious metals space right now as we speak, just over the weekend and today on Monday, November 10th. Gold climbed almost 3% intraday, which is a huge move for gold. Silver is back up above $50. And we'll talk about what's next for both of these metals, specifically silver, with our next guest, Shawn Khunkhun, CEO of Dolly Varden Silver. Dolly Varden has been busy, and we'll talk about some of its most recent results coming from its drilling program, and we'll talk about what's next for the company and the entire mining industry overall. There's no better person that I can think of to tell us about the industry than a veteran mining CEO himself. So please welcome Shawn. Welcome back, Shawn. Good to see you.
David, thanks for having me on. Nice to see you.
Yeah, I want to thank you for coming back and supporting the program. And let's talk about silver. We had you on the show in Beaver Creek at the Beaver Creek Conference. That was in late September, at the Precious Metals Summit, Beaver Creek, Colorado. Beautiful place, beautiful conference. Silver just broke above $40 at the time. And we hadn't talked to you about your reaction to silver breaking $50. So there we were talking about $40. There was a huge substantial run. There was a rally that lasted months, culminating in the $40 mark that we spoke about when we talked in September. Since then, it hasn't stopped running, and now it's broken above $50 for quite some time now. And the last time we had $50 was in 2011, and that lasted a few days. Importantly, the difference here is that it didn't last just a few days. Silver has been consolidating around $50 for almost all of October. About a month now, we're into the middle of November. It's fallen below 50, it's hovered around 48, now it's back up above 50. Why is it that this time it's so sticky around the $50 mark, whereas the last two times it's happened, this is only the third time it's happened in silver's entire history. The last two times this has happened, silver crashed immediately.
No, it's a important differentiator when we compare this recent run to and through 50 and the two previous runs to $50. So if we examine the move, 1979, 1980, that was a move where silver had dramatically moved in a very, very short period of time, similar to the move it made in April of 2011. Right. And they were moves that were not sustainable. Whereas this move, it's been a lot more gradual, right? So it's been a gradual increase. And it's also important to note, David, that, what 50 nominal dollars means today versus what 50 nominal dollars meant in 2011 or in 1980 are drastically different. And one of the relative values that I look to point at is when I took over as CEO at Dolly Varden, I would need 64,000 ounces of silver to purchase the average home in Vancouver. That was in the spring of 2020. Today, I only need 15,000 ounces of silver, not 64,000 ounces. So I think what's changed is, with COVID, with the expansion of the money supply growing by 25% during the pandemic, it requires that many more dollars to go after these hard assets, including silver.
What's interesting is if you take a look at this long-term chart of silver, let's look at 1980, for example. It was it touched it for less than a day. It touched $50 for less than a day, a couple hours, I believe, until it fell back down to its prior base of around $4, $4.90, $5, and then it hovered around that base for multiple decades. You see how silver was trading around $6, $5, that kind of range, until it started breaking out around 2004. And the same thing happened in 2011 when we had silver reach $50. It hovered around the $40 mark for a few weeks, and then it crashed down towards its prior base of $16. And it stayed there for a few years, about 10 years actually, until it started going back up again because of the quantitative easing following the pandemic. Now we're in let's say the middle of this bull run, or some would even argue the beginning innings of a new bull run. And if history were to repeat itself, even if silver were to correct from $50 an ounce, which it hasn't done yet, but even if it were, it would probably retrace to a base that's much higher than $16 an ounce. Probably, if you just take a look at the charts, $32 or $30 an ounce. I don't know if the market is telling us that in the prior two cycles that the fair value of silver really was $16 and then $6, in which case we could kind of extrapolate and say, well, the fair value of silver is around 40 or 36. Have investors been talking to you about this issue? Is there a new fair value here for silver?
It's a great question. And one thing I want to point out, as you had that longer term chart that predated the 1980 price spike to $50, when one of the Dolly Varden mines was operating, 1959 was the last year the Torbert mine operated, silver was 85 cents an ounce. So the move from, call it 1960 to 1980, if you were to take that same move from our base, that would imply, using a $16 base, $800 an ounce. So to try to capture the type of move we had from 1960 to 1980 during this next leg up in the bull market, it would equate to an $800 silver price. Now, what are investors saying about sustainable prices? It's very, very difficult for the industry to want to invest in exploration and development when you're in a sub $25 price environment. Once you start moving north of $25, you start having an incentive to explore and to develop. One of the most legendary silver mining executives in the industry is Keith Neumeyer. And he was recently interviewed, and he talked about how he was celebrating the fact that we have seen the price go from 25 to 50, and we've seen the equities, mainly the venture exchange, go from 500 points to 1,000 points in that same period of time. And money has come into the space and exploration is occurring, because what that does is it creates the level of endowment needed for larger entities like First Majestic to come in and start acquiring projects. So, to answer your question, I think you need an environment of north of $30 to incentivize exploration, development. But look, you're going to find mines that are profitable at $20, but, broadly speaking, you need prices north of 25.
Yeah, so 25, 30 is the new 16, basically, is what we were discussing earlier. Now, Shawn, M&A activity is a little bit muted now compared to 2011. This is based on the conversations I've had with executives like yourself. There's two ways to look at this. One, miners, the seniors and producers are more disciplined with their purchases and their valuations assessments than 15 years ago. Or number two, nobody believes in this rally. What's more true for you?
Well, look, I think there's two different conversations. There's a gold conversation and a silver conversation. On the gold side, what you had during the bear market, which really started in around 2012, 2013, and lasted up until about a year or two ago. You saw mega mergers. You saw, Barrick and Randgold come together, Newmont and Goldcorp. You saw Agnico Eagle consolidate and become the largest, gold mining company in the sector at $120 billion valuation. So I think as we look forward to M&A, because you had these mega mergers, M&A is going to be different now, where those companies are going to rank what they describe as tier one to their business and start selling what were the building blocks to their portfolios and start divesting them to smaller entities. So I think M&A is going to be quite nuanced. it's a totally different conversation in the silver space, because in the silver space, again, there are only 10 primary silver producers. And if we examine these silver producers, and something very topical is Coeur. Coeur just announced last week that they're buying New Gold. Well, after the purchase of New Gold, Coeur's revenue that is silver centric moves down to about 25%. So how we even define what is a primary silver company, if we look at the Pan American example, where like 28% of Pan American's revenues are silver, there is really only one silver centric entity, and that's First Majestic, where 55% of their revenues are derived directly from silver. So silver is a tough space because it's so scarce and so rare, and because it's predominantly produced as a byproduct. But what we have seen is, in a space that used to cover 13 companies, is now contracted down to 10. And one could argue that some of those silver-centric companies are now, becoming gold centric. And so it's become even smaller and smaller and smaller. And so as investors start getting priced out of gold opportunities with a $4,000 gold price, as the gold market's becoming more and more expensive, and as retail investors buy silver and the demand for silver increases, and that's why we've seen silver prices outpace the ascent of gold, it's going to be even more difficult, and it's going to make the silver-centric opportunities even more valuable.
There is a massive frenzy in the retail market. I'm not sure if you're aware of this. Being a CEO of a mining company, I know you're not running bullion operations, but I've had friends who aren't professional traders, who I never really talk about markets with, tell me, "Hey, David, did you know that Costco is out of silver? What do you think of silver? Should I try to find more? Who's selling silver? Costco's run out." This is crazy. I mean, what do you make of this retail fervor around silver, which really isn't a mainstream asset when you think about it? I mean, CNBC and Fox News isn't headlining silver every single day.
Well, look, I think the first question is why? What, right? And it's gold and silver. Why has the gold price doubled? Why has the silver price doubled in the last 6 months? Like, why? And I think the answer has to do with confidence. We are in the midst of a confidence in governments, in a confidence in currencies. And so investors are looking to protect themselves with silver and gold. And then if we examine what's happened in the silver market, is central banks, and initially it's Russia, and it's India. But India has made a very bold move. And I made a post about this about a week or so ago. So if you go back to 2009, the Reserve Bank of India made a very large, substantial gold purchase. And this was done at an average price of about $1,000 an ounce gold in 2009. Now that purchase has aged very well. Why did they make that purchase back in 2009? It was to diversify against a falling US dollar. So the RBI, the Reserve Bank of India, has been spot on in their outlook and their conviction, and that purchase in gold marks that. Now, what did the RBI just announced? They announced that they're potentially looking at bringing silver into their monetary system by allowing investors to use silver as collateral, introducing it into the banking system. And they furthermore doing it at a 10-to-1 ratio, a 10-to-1 silver to gold ratio. 1 kilo of silver is worth 10 times less than 1 kilo of gold. So if you think about that now, David, we're in an environment in markets where paper markets dominate the price. In one day, you've got 2 billion ounces of silver trading hands in the paper market. However, we're only mining and recycling on an annual basis half of that amount, 1 billion ounces. Okay, so on a paper market, we're trading 2 times annual supply. And we're doing this at an 80-to-1 silver to gold ratio. So the RBI was right about gold in 2009. If they're right about silver, that implies a $400 silver price based on a 10-to-1 silver to gold ratio.
So the Bank of India is making a bet on silver for a monetary reason, correct? Not for just a critical minerals reason. Let me just get that correct.
Listen, the rationale of why I can't speculate on, right? Now, the reality is, India and China have had China never had a gold backed currency. They never had a golden age. They had a silver age, right? So the big demand for silver is from China, from India, from Russia, from the East. And they are acutely aware that over the last 100 years, as we've looked to electrify the world, there is no substitute for silver. It's the most conductive metal in the planet, right? Its use in electrification, in the military industrial complex is very significant and material. And because of that, in the last 100 years, post-industrial age, we've gone from using 90% as a monetary metal down to 50%. So we've got growing industrial demand, which has led us to 200 million ounce a year deficits for the last 5 years. So I think the RBI is acutely aware of this, but the rationale isn't because of the critical component. Like I was just looking at the Trump administration adopting silver as a critical mineral. Now, if they evoke Section 232 and apply tariffs like they've threatened to for copper, what did we see happen to the copper price in the beginning of summer? We saw a move on copper futures from $4 up to $6, a 50% move in a very short period of time. If something were to be similarly introduced to silver, we could see $75 silver overnight.
This is a letter that was an open letter. I'll get back to the silver $75 projection in just a bit. This is a open letter made to the Minister of Energy and Natural Resources in January 31st. Or late January 2023. It outlines why silver should be classified as a critical mineral in Canada. While we believe that an effective argument can be made that silver meets all of the first 3 criteria, the most striking argument for silver as a critical mineral falls under the scope of criteria number 2. So number 1 is essential to Canada's economic or national security. Number 2 is required for our national transition to a sustainable low carbon and digital economy. Number 3 contributes to Canada serving as a sustainable and strategic source of critical minerals for international allies. In addition, critical minerals must satisfy both of these criteria. The mineral supply is threatened. The mineral has a reasonable likelihood of being produced in Canada. You signed this letter along with a few other of your contemporaries in the space. Why did you sign this letter, Shawn?
I signed this letter because, again, look, I look at the leadership that Keith Neumeyer and First Majestic has had in the space. First Majestic had reached out and educated me about this petition they were putting forward, and I look at the work that Keith Neumeyer has done in the space. He's got the first mint for First Majestic in Las Vegas, Nevada, and so I supported First Majestic. And I believe there is no substitute for silver. Silver should be a critical mineral, and I think it's very, very important in military, in defense, in electrification, in photovoltaics, but also as a monetary metal. So I was happy to support that letter.
I want to talk about Dolly Varden now and what you're doing with the company, because what a mining company does at all levels, producer, even explorer, tells us where the industry and ultimately where the metal may be headed. So what was your initial reaction to $50 silver, both personally and strategically as a CEO?
Well, look, it was rewarding. When I took over the CEO role at Dolly 5 years ago, it was at $16. It was the base that you'd highlighted on one of your earlier charts. And so what I was looking at was I was looking at an environment where I was convinced that from a gold to silver ratio standpoint, we could go to 20 to 1 to 15 to 1. So I was convinced that we were going to see much higher silver prices. And what I was trying to build was a business that went out and tried to build itself during a depression in the metals. And so as I did not see the larger producers invest in a pipeline of projects, the idea was get out through acquisitions, through good science, build a portfolio of assets that would one day become very, very attractive to a producer as they were looking to replace their mining pipeline. As they, every day a producer goes out, they deplete their mineral resources. So that was the idea. So $50 silver. Look, it was rewarding. It was rewarding that $50 silver occurred, but it's all relative. One of the things that happened after I came in as CEO was the pandemic print, where we increased the money supply by 25%. One of the things that I never factored in was this growing industrial demand, the fact that photovoltaics were going to take off, the fact that Samsung was going to make a battery for electric vehicles that used a kilo of silver. So I never factored in growing industrial usage. I was just banking on investors looking to gain exposure to silver as a hedge against systemic failure, monetary devaluation of their fiat currencies. And so it was rewarding. However, it's all relative. As the all-in sustaining costs to produce these metals go up, the metal prices need to stay ahead of that.
Shawn, you mentioned to me last time that there's a potentially 200 million ounces annual silver deficit because of a lot of the reasons you just talked about, the critical nature of silver in our industry. Now, I'm just going to echo some concerns of not just an investor, but maybe just the average person living in our economy. This is a critical issue, no pun intended, but the silver industry, it's frustrating talking to a CEO and then we hear, well, we may have the mine ready in 10, 15 years. Well, in 10, 15 years, this deficit is going to be blown out of control. And either everything spikes up because of inflation, or we can't achieve some of the targets that the government and our industry have set for sustainable growth in the energy sector, or even the transition to a clean energy economy, or the transition to more AI, right? We need silver for a lot of these things and more. Yet this deficit isn't going to fix itself. What can the industry do to expedite this, Shawn?
I don't know about the industry in large, but my strategy is to focus more on direct shipping ore opportunities. So when I entered into the industry 22 years ago, there were projects that were at the exploration development phase that are still at the exploration development stage today, 22 years later. So to your point, how do we get the metal out of the ground sooner, faster, and for less capital? And I think the solution there is to look for high-grade mines that are within close proximity of underutilized production facilities. So my business model has been to focus on grade, to focus on DSO opportunities. And I think these opportunities are going to require less CapEx and shorter permitting timelines, because you're not building a mill and tailings. You're just direct shipping the high-grade ore.
You said, I think, correct me if I'm wrong, but I believe you said that 1 in 4 ounces of silver comes from primary mines. Has that ratio changed, or do you think it'll change?
That's a great question. That ratio has not changed. 3 out of 4 ounces come as a byproduct or from a polymetallic operation. I The only thing that'll change that is if the price of silver gets high enough that incentivizes some more primary mines to come online. That ratio could change, but I don't see it
Wait, is
change.
it more expensive to operate a primary mine?
I think what ends up happening is when you're looking at, first of all, we got to look at like how silver is just distributed and endowed, throughout Mother Earth, right? And so it's mainly polymetallic by nature in most of its endowed forms. Now, if you want to incentivize those 1 in 4 operations, if you had a high enough silver price, you could focus on those primary mines. They may be more lucrative than the copper miner who's going to just be focused on the copper that's spinning out the silver as a byproduct. The same as for the lead zinc miner, the same as the gold miner.
So let's assume silver doesn't go to 75 or 100, without those higher prices, can we see a mine into extinction scenario? Or do we have enough new projects or new technologies that could alleviate this pressure?
Look, I made the comment to you a couple of years ago that I think there was going to be a mineral that comes off the periodic table and gets mined into extinction. Silver had all the attributes for that. Now, having said that, look, I think that's probably unlikely and very unlikely in my lifetime. And the market has a way, the cure for, as Rick Rule says, the cure for high prices is high prices, and the cure for low prices is low prices. So I think the market has a way to substitute. But again, depending on what the application is, there really is no real substitute for silver. And that's why I made the claim to begin with. But furthermore, look, I think we are now starting to be incentivized to go after primary silver mines now that we're in a $50 price environment. And I think as governments, now designate silver as critical, and here in Canada, we are treated with some of the same advantageous tax treatment as metals like copper. It's going to encourage even more money going towards exploration and development.
Well, give us a rundown for our new viewers, or maybe viewers who haven't watched our prior discussions. By the way, you should check out Shawn's prior interviews with me. He's been very prescient in calling for how the markets moving. But anyway, can you just tell us about the deposit of Dolly Varden? Talk about the Golden Triangle of BC in which it is situated.
Yeah, look, I love the Golden Triangle because number one, it's in my backyard and it's easy to manage from a currency time zone. So it's in Northwest British Columbia. It was first discovered about 100 years ago, but in the last 30 years, with glaciers receding, with infrastructure coming in, there's been 150 million ounces of gold discovered, and 2 billion ounces of silver discovered, and it's home to 2 operating mines that one of the biggest precious metals companies in the world operate. That's Newmont. And so it's a rich area. And what Dolly's done is built a 100,000 hectare land package with 5 past producing high-grade silver mines. And our strategy has been to drill, evoking new technologies and some good science, investing $100 million into exploration. And what we're on the cusp of is 100 million ounce silver resource with 1 million ounce gold. Now, officially where we are today is we're at 64 million ounces of silver and 1 million ounces of gold. But I think by the time we put out our next mineral resource estimate, which is scheduled to come out in Q1, I think we'll see a significant increase to existing resources. So we're a company that has $64 million in the treasury. We've got a big silver and gold resource, and we've had 3 pillars to build our business: raising money, good science, and making acquisitions. And we have all the money we need for the next 2 years. We have got 80 drill holes to report, like the ones we reported today. And lastly, we're looking at more we're looking to be more acquisitive. We've made 5 acquisitions. They've helped grow the company from 20 million to 500 million, and looking to make more into the future.
Well, just to take a look at your balance sheet, which, by the way, is on your website online for free to access, as of December 31st, 2024, you've got $12 million in reserves, roughly $12.5 million in reserves. And if we were to go to the prior year in 2023, that was 11.5 million. And then the prior year before that, 2022, was only 9.89, less than 10 million. So it's climbed considerably in the last 2 years alone. What contributed to that growth in reserves there?
Well, I think discovery-oriented drilling, strong accretive acquisitions, and we raised $63 million this year. So when we report our Q3 numbers, which should be out here in the next week or so, you'll see. I don't know the exact bank balance in this moment of September 30th, but on the most recent report that I had from October 23rd, we had $64 million in the bank.
This is your corporate presentation, the latest one that was updated today. These deals here, we don't have to go into detail about why these particular projects were targeted, but just generally speaking, how do you decide on which deposit or which area you want to acquire, where you're even interested in?
Well, look, I listen to my scientists and the engineers and look at, where the mineralization that we currently have under ownership, where is it expanding and extending, and what contiguous ground we want to pick up on that basis. I also challenge myself to look at mineral inventory, historical numbers, both production and reserve numbers, and look for situations like all 3 of these acquisitions. We were able to go from 15,000 hectares. We grew by 6 times in terms of size. So it was a 600% increase in ground. And we did that at a price of 2% dilution. We went from, if you look at the next slide, we went from 2 past producing mines to 5 past producing mines. And then if you go to the previous slide, I think it's slide 7 there, just before the, yeah. Look, it was on the back of a deliberate decision to list on the New York Stock Exchange. So everything we do, and this is a process that for some companies takes years. For us, it took months, but we made a decision in January to make the move to NYSE. That was accomplished on April 21st. And then those acquisitions that you started sharing, those happened in the month of May. So in a 15-day period, we use that share price increase to do all share acquisitions. So we're deliberate in our approach, in our thinking, and we've been successful to date at managing to grow the business.
Wait, so help me understand this. So let's say if an investor who is skeptical of your M&A strategy were to challenge you and say, hey, Shawn, we can go out and buy new deposits ourselves in the form of investing in other companies. If we wanted to diversify, we can just do that ourselves. We don't need Dolly Varden, which so far is not a producing company yet, to expand its reserves. We just needed to focus on one reserve. We can expand reserves ourselves in our portfolio simply by buying another company. How do you as a shareholder, how do you as a CEO, even add value to a company by simply buying other deposits? How would you answer that?
It's a great question. So what I look to do is accretive deals. And so I'll give you an example. Let's focus on one of the acquisitions. We bought the Porter, Idaho deposit, which was known as the richest primary silver mine in the Golden Triangle. So we were trading at the time at about $2 per ounce in the ground. We bought Porter, Idaho for 8 cents an ounce in the ground. So for me, if let's say, I'll just throw out a number here. Let's say our discovery cost is 15 cents an ounce in the ground, just an arbitrary number. Well, it was more cost effective was more accretive for us to acquire because our currency, we have currency at $2 an ounce. We acquired at 8 cents an ounce. So look, we're going to make mistakes. Not everything we're going to do is going to be optimal. But I think when we look back at the 5 acquisitions we've made and we look back at where the share price was and how the company has grown, I think we've demonstrated over the last 5 years that we are a competent team that has not only had growth, but sustained growth. And I think that's an important differentiator. A lot of companies can move up and launch, but can they sustain it? And I think one of the things I'm most proud about is we've backfilled the rise in value. We've mitigated a lot of volatility. We've seen silver prices as low as $12, as high as $54. And we've run a business where we tried to play from a position of strength, and we went out and we bought things when things were cheap, and we went out and raised money when things were fairly valued. So it was less dilutive. And I just think taking a balanced approach and playing with the cards you're dealt is important to our success.
Well, focusing on your current deposits now and moving away from the M&A discussion, tell us about the recent intersect that you just announced.
Yeah, it's a big intercept. We drilled 26 grams of gold over 14 meters. And just to put this into the context of any non-technical observer, if you took the grams and you took the meters and you multiplied them, they would give you about a 350 gram meter interval in gold. And just to put that into context, like, is that good? Is that bad? Is that economic? Typically, if you follow some of the best companies in the world, they're getting 100 gram meter intervals. So this is 3.5 times what spectacular is for most. And all 3 of the results that we've put out, September 2nd, October 1st, and now November 10th, have all been better than 350 gram meter gold equivalents. And so this is a new discovery. This is not factored into our existing mineral resource estimate. And most importantly, if you just scroll down a little bit, David, and you look at the image, just the one above there of the rocks of the core. Now, why that's so significant is there's a underutilized mill just north of the property, and the one piece of rock next to the drill core is from Ascot's premier mine, from the 310 level, which was running about 10 ounces per ton gold or 300 grams per ton gold. That core is running over 433 grams per ton. So this is analogous to Ascot's premier. And why that's important is if you think about the area at large, there are some very significant gold deposits. Eskay Creek, which is in Skeena, a $3 billion company. Brucejack, which was operated by Newmont. We're in a very rich area. And what this report tells us is our deposits are similar to those big, like Premier, when it was operating, David, was the most profitable gold mine in North America. And so, we're in the right rocks. We're in, safe Canada in terms of jurisdiction. It's a super high grade system, and it's unique because it's primary silver, and then it transitions to silver and gold.
Now, let's say a new investor or somebody who's interested in your company were to say to you, Shawn, with the silver price of $50, why don't you go out and raise even more money right now at much higher valuations, and then you could potentially expedite the drilling by investing even more into drilling than what you're doing now? But then existing shareholders might say, well, hold on a minute, I don't want to be diluted. So how do you balance growth right now at $50 an ounce with dilution?
It's a great question, and ultimately, what you have to ask yourself as an executive is you got to balance that dilution and growth. And what I'm looking to do next, David, is I think I'm willing to take on dilution if it brings in cash flow.
Yes.
So that's our next objective. Is
how would you bring in cash flow?
So to merge with an entity that is cash flowing.
Oh, Is this a new strategy, or have you been working on this thought for quite some time, Shawn?
Well, listen, when I started looking at Dolly Varden, it would have been 6 years ago. I had a strategy session in Q4 of 2019. The new board and team did not come in until Q1 of 2020. But as we had a whiteboard session on, who do we want to be when we grow up? All of these things were discussed in that meeting and have guided our vision and our strategy. So it's something that when you're a $20 million company, you're not going to contemplate hundreds of millions of dollars of acquisitions, right? But as the company's grown, as the company's had success, as the metal prices have re-rated positively, now we can start thinking about how do we get ourselves operating in the most cost-effective, timely, and least dilutive option. Unfortunately, a lot of my counterparts are so focused on merely advancing operations, they do things that hurt the long-term economics of the project. They attach punitive royalties and streams onto the operation. What I'm interested in is ROI for investors. And so I'm looking at creative, minimally dilutive options onto achieving some of those things that you're talking about, accelerating our development plans, taking advantage of $50 silver. But I also want to take advantage of $75 silver and $100 silver. I don't think this run is over. And it's important that we staircase our approach in terms of dilution.
Fair enough. And finally, you told me your goal was to transform Dolly Varden from an advanced explorer to a tier 1 or top 10 silver equity. How close are you right now by the end of 2025?
Look, where we started 5.5 years ago was obscurity. We weren't on the map. Today, where I believe we are is we're a top 13 entity. There are 10 primary producers and there are 3 developer advanced explorers. I think we represent 13 of 13 in that list. And so, my goal now is I don't want to stop until we're number 1. And so I think that's going to take potentially another 5 years to build. If we get there, there's steep competition. There's some very smart teams that have a big head start. We may never get there, David, or maybe the only way we get there is we get acquired by number 1.
Well, I wish you the best of luck. But in the meantime, what is the next major milestone for drilling and or an acquisition idea or plan that you can announce right now?
Yeah, look, one thing I can say with certainty is I'm going to deliver 80 more drill holes. Okay, they're coming. And in addition to that, we're going to continue to challenge ourselves on the acquisition side. And, sometimes acquisitions take years, so we're not going to force it. In order to pass along the value to our investors, like the Porter, Idaho transaction, we need to buy something right. And unless it's right, and unless we can pass on those savings, we're not looking to do a deal for the sake of doing a deal. We're looking to do good deals where we can pass on that value to our investors.
Well, thank you very much, Shawn. Where can we follow you and or Dolly Varden Silver for updates?
We're very active on social media, LinkedIn, X, and other platforms. We've got a contact page on the website, dollyvardensilver.com. There's a phone number. There's an email address. Feel free to reach out to us and contact us. We like talking and interacting with shareholders. I'll be hitting the road, going over to London and over to Switzerland. I'll be over there for about 10 or 11 days, meeting one-on-one with both high net worth investors and institutional investors. So we're going to be very, very active between now and the end of the year.
Okay, very good. We'll put the links down below. Make sure to keep up to date there. Thank you very much, Shawn. We'll speak again soon. Take care for now.
Thanks, David.
Thank you for watching. Don't forget to like, subscribe.